Hello, here we are on our third and final video for this series, how to determine entry-exit areas. And we're going to continue right where we left off at. Again, the disclaimer is in the description, and I'm just going to mention it here. I'm not a commodity trade advisor. The information that's presented here is for purely educational purposes only. Trading contains risk, and if you do trade, do not trade with money that you cannot afford to lose. That is very important. Do not trade with money that you cannot afford to lose. Give me a second here, and we'll jump right in. Okay, here we back are with our Euro USD as we were using in the previous two videos. And we're just going to go right in from where we're at. This is our weekly and monthly high resistance area. This is our weekly and monthly low support area. So what I'm going to do is I'm going to shorten this up by adding some additional support and resistance lines. We're going to take this to the top here. And we're going to add another one here. This is our current swing movement. And I'm going to change the color to red because that's support. Okay. So what we're looking for here is a clean, since this current price action is currently bearish, what we want to see is multiple touches on resistance, price testing, and price going back down as it is. If we were going to enter here, we would enter, and our stop would be, we make this red for our stop loss, and I will change the style. Our stop loss is going to be above the last high for a buy, which would be up here, plus the spread. It's very important that you include your broker's spread. So for a buy, for a sell, if you're selling, it's going to be above the last high plus whatever your spread is for the Euro USD pair or whatever other pair that you're trading. If we were selling, if we were buying down here and we were entering, we wait for a U-turn or an engulfing candle that showed us that we had a bullish movement. We would then enter, and our stop loss would be where the last low is for a buy entry plus the broker spread. So let me just write that out. If I am selling, my stop loss would be above the last high plus the spread. It's very important to include that your spread in your stop loss because you don't want to be stopped out prematurely. So for a sell, you want to make sure you're above your last high plus the broker spread. If you're buying, it's going to be the reverse. If I am buying, my stop loss would be below the last low plus the spread. And usually the spread for this pair is pretty low, depending on what broker you have, anywhere between 5 and 10 points. So you just include that, whatever your the last low or the last high is, plus the spread, whether you're selling or you're buying in market direction. Your take profit is going to be, if we are selling, your take profit, you're looking to go here. You're looking to come from here to from this entry area down to this support level, which is 73.1 pips. Your risk is anywhere from, we're looking at almost 10 pips. So you're looking at 20, 30 pips of risk for 75 gains. So that's a 1-to-2 ratio. And it'll be the same thing if you're buying going north. You would be going up to this resistance area. That's it. So any questions, please post in the comment section, like, share. I hope that these 3 videos have helped you with the basics for entering the market, how to determine market direction structure, 2, how to determine high and low prices, and 3, how to determine your entry and your exit points. Thank you for your time.